But the big news that came in, right? India's fourth quarter GDP has come in much higher than estimated at 6.1% versus a poll that CNBC put out of 5.1%. So it's a big beat. As a result, the full year GDP has also come in much higher at 7.2% versus market estimates of 7%. A bunch of economists from banks like SBI, Citi and JP Morgan have now raised their FY24 forecast to above 6%. Great news coming through. Lata is joining in to give us more details on that. Lata.
Well, what did the economy do? It scored a 6. That's very important. I mean, 6.1 wasn't anyone's guess. Nowhere near even the upper end of our forecast range. We had 5.5 couple of poll respondents. So that's a very big surprise. And obviously, because of that, arithmetically, the full year also goes up to 7.2 from the earlier 7% forecast. Economy fired on almost all cylinders. That's very big. I guess that's a 6 as well, because, agriculture, 5.5%, manufacture, 4.5%. I'll call 4.5% good because the estimates I got was between 1 and 2%. So, that's also a very good performance. Power, gas, other utilities, 6.9. That was always expected. Power has been good all through the year. Construction, 10.5. No one expected, though double digits were expected. The trade, hotels, transport and communication. This is a huge, largely MSME informal sector. You know, your Udupi hotels, ST buses and all come in that. That's at 9.2. And again, on expected lines, but that shows the recovery of the economy. Let me come to GDP from the expenditure side. All these are from the output side. From the expenditure side, the country has spent a lot of money on capital formation. 35% of the GDP. That's an 8.9% growth. Again, very good news for the economy and even for the stock markets. And to the loan factor, which I would say is a huge negative, that is personal final consumption expenditure growing only by 2.8%. And that may be one factor why at least some economists are not yet revising the forecast for FY24 higher, just to worry that the multiplier effect of growth is not yet happening. Net exports is also something we take into account, imports minus exports. Clearly, imports have been weak. That adds to the economy in the sense that, you're subtracting less, but that also signifies a lower ability to absorb imports. And that could be a bit of a worry. And these are deflated numbers. You can't say because prices fell, because this is real numbers already adjusted for inflation. But it's the positives that clearly outweigh. And so we have a string of forecasts upgrades. SBI is the one that stands at the top. From 6.2 earlier, they were already higher than the bunch. They come to 6.7. For the first time, somebody is higher than RBI. Until now, RBI's forecast at 6.5 was the highest. Now somebody's climbed higher. Citi has revised up from 5.9 to 6.2. JP Morgan was at a very, very pessimistic 5. They've come to 5.5. But still, that's a 50 basis points increase. Morgan Stanley was at 6.2 and they see no reason to go higher than that. Again, all these are the ones that haven't revised. CLSA 5.5 remains 5.5. HSBC 5.5 remains 5.5. MK says 5.7 and the 5.7 new has an upside risk. But I must add that policymakers are extremely thrilled. You heard the chief economic advisor yesterday saying that they were going with a forecast of 6.5 and they were told there would be downside risks. Now it is risks evenly balanced. And the person who is having the last laugh is, of course, the Reserve Bank. Always stood with 6.5 and now the market's falling in line.
All right, Lata, thanks very much for that. And I think markets will take heart from that. They're in a tough year like this where global growth has been a big sort of area of challenge. Growth here is actually much better than what it was expected to be.